Almost every church, even the smallest ones, has certain payroll reporting responsibilities as an employer. In this video, we'll cover the 6 most important employer reporting issues. Number 1, determine the classification of workers. Excellence in church reporting as an employer starts with the assurance that all workers who should be treated as employees have been on the payroll during the year. That's an evaluation process that should take place throughout the year. In fact, the evaluation should occur each and every time that a new worker is engaged. Number 2, understand the minister qualification issues. Most ordained, licensed, or commissioned ministers will qualify for ministerial tax treatment. This means a minister generally qualifies for a housing allowance designation and tax-free treatment of housing expenses, subject to certain limitations. Number 3, understand the income and Social Security tax treatment of ministers. Qualifying for ministerial treatment means that the minister is always subject to self-employment type Social Security. This type of Social Security is fully paid by the minister and reported on Schedule SE. FICA type Social Security applies only to non-ministers, with the church withholding 1/2 of the Social Security from an employee's pay and the church matching. Again, FICA type Social Security never applies to ministers, and the improper application of FICA Social Security to ministers will result in the underpayment of taxes by ministers. This is not tax avoidance, which is a legal concept, but rather it results in tax evasion, which is not legal. Number 4, include all taxable income on Form W-2. Some payments to and on behalf of employees are tax deferred and non-taxable. However, many payments are taxable and reportable on Form W-2. Here are some of the most common types of taxable income which are often incorrectly omitted from the Form W-2 of employees. Moving expenses. All payments of moving expenses reimbursed to an employee or paid on behalf of an employee represent taxable income. IRA payments. Payments to an employee's individual retirement account are taxable income. Love offerings. Love offerings paid by the church to an employee are taxable income. Non-accountable plan reimbursement of business expenses. If business expenses are not substantiated under an accountable plan, these amounts are also taxable income. Personal use of a church-owned vehicle. The value of any personal use of a church-provided vehicle is considered taxable income to the employee. On the other hand, there are items that are also excluded from taxable income. The fair rental value of a church-provided parsonage or a properly designated housing allowance for ministers are both examples of exclusions. We also have business expense reimbursements that are paid through an accountable plan, or also contributions to a 403B or a 401k plan. Number 5, obtain Form W-4 for new employees. Obtain a Form W-4 for each new part-time or full-time employee, but ministers are an exception to this requirement. The withholding allowance information completed on this form gives the basis to determine the amount of income tax to be withheld. Number 6, file payroll tax forms and pay all payroll taxes on a timely basis. Payroll taxes must generally be paid electronically on a monthly basis. The cost of missing deposit deadlines can be very high. Besides interest, the church can be hit with penalties at progressively stiffer rates. Payroll tax returns must be filed quarterly, and Form W-3 and Forms W-2 must be filed annually. So there you have it. Those are 6 basics of church reporting as an employer. Following these foundational principles will not only ensure compliance with the law, but also bring glory to God as churches demonstrate their commitment to excellence and integrity.